And what we want to do today is help you guys understand a little bit what's going on and why. And we'll give you a real estate market update, hopefully give you some context with some historical data. Um, and the big story right now is the rise of interest rates, right? So what is the impact that the rising interest rates are having on the housing market? So people see the mortgage rates and wonder, are home prices going to fall? I've been hearing this since the pandemic began. There's always a boogeyman reason to expect that the market will collapse. I mean, we still have anxiety based on what happened in 08 and 09 after the home values had increased as much as they did. So let's see what happens historically when rates rise. But first, let's look at how much rates have risen this year. So going based on what Tom had mentioned, so interest rates have increased a lot. This is where we started at in the beginning of the year, just over 3% on average in the country, and we ended March right at just over 4.5%. As Tom said, we are at about 5 right now. But where do we go from here? This is all data from Freddie Mac. So a lot of people are asking, why are interest rates rising? Because we don't understand if they will continue to rise or what's causing it, in order to anticipate better how to make our moves based on this costly factor. So according to the economist at Freddie Mac, so mortgage rates are likely to continue moving higher throughout 2022. They feel that it's going to continue rising at a slower rate, and that the market has priced in future rate increases from the Fed that they've been signaling since last year that they would do, and they started. So because the market has priced it in, we expected it to rise until about this point, but it is not generally expected to keep rising that much further. So what does this mean for housing prices? Are housing prices going to fall, which is a lot of people's question, right? So we're going to go back to October 93. So going back almost 30 years of data from Freddie Mac, and you'll see that these are periods in time where mortgage rates have risen by more than a point in a short period of time, between 8 months and 19 months. And what happens to home prices in those times, in those last 30 years. So we see an average of about 8% appreciation as mortgage rates are rising by more than a percentage point. And we can see that rising rates have not had a negative impact on home prices. So when we see the news out there saying that the market is slowing, that it's softening, we misconstrue that to mean that home prices are dropping or are about to drop. But that's not the case at all. Especially locally, we have seen prices continue to increase. But what is softening? What is slowing down? It's actually home sales itself, right? So while prices can continue to increase, regardless of the mortgage rate, less homes are sold. So it does slow down the speed at which homes sell. So in this chart here, we'll see exactly that. We'll layer on this information. So we see that in these moments when mortgage rates have risen by a point or more, home prices have continued to escalate, but home sales tend to decline. So they sell slowly. We sell less of them. And that is a huge problem right now, not just because of the low inventory, but the rising interest rates do take some buyers out of the market. It does price some people out. But what does it mean overall, right? And what can we expect? So we have a drastically different environment, like Tom said, right now than we have had in the past. And let's dig in to show an example. We'll dig into 1993, 1994, when we had this bigger increase in mortgages, and see what happened there. So in that point of time, we increased by over 2.5 points, not too far from how much we've increased so far this year or from last year to end up at a final mortgage interest rate average of 9.2%. This is all according to Freddie Mac. Home prices still increased, but home sales did decrease by 11%. So we are not projected to increase 2.5 points from here. And we're not projected to come anywhere close to 9% average interest rates in this country. We are in a very different environment. So let's take a look at the rising mortgage rate environments that look closer to where we are today, like the better examples to compare to where we are. So here you'll see that home sales, as mortgage rates were rising, they saw a negligible impact in the impact on the market. Home prices still increased, but not that much. Home sales decreased, but also generally speaking, compared to now, similar environments, not that much. The obvious outlier is 0506, which is the lead up to the housing crisis. But back then we had much less bad loans. We had very easy loans that anybody can get. Tom could tell you about that. And we had a drastic differently inventory level. We had a lot more inventory than we do now. So right now we're at a complete opposite in extremes where loans are harder to get thanks to all the protections the government put in place so that mortgages don't cause another financial crisis in the housing market. But inventory is historically low levels. And if we look at inventory levels in these same time periods, we don't have data before 2020, before the year 2000, but we'll see that we had average monthly inventory in this country of about 4.8% in those similar environments of rising interest rates. So just to highlight the difference of where we are, right now in Rhode Island, we've got less than 1 month of supply. Just letting that sink in. It's about 25 days of inventory in Rhode Island. And if we isolate Bristol County from Massachusetts, we have even less. So Rhode Island itself has historically record low levels. In March, we hit the absolute bottom of inventory. And we can see that Bristol County is even worse than that as a metric. So we have a huge deficit. A balanced market is usually between 5 and 6 months is what we consider to be a buyer's market, where buyers and sellers are equal in their power. And what's projected to happen from here, supply and demand dictates, prices will continue to rise. So even though rising mortgage rates only slow the increase, there hasn't been much impact as we see from the data, and low inventory means that we will continue to rise. The slowing sales that we see in the news is an inventory issue, not a mortgage interest rate issue. We can't sell what we don't have. And I just want to highlight this here. This is from the National Association of Realtors, this quick heat map. So you see buyer traffic and you see seller traffic. And you'll notice that we are in one of the few places in the country where we have both extremes of very high buyer traffic and very low seller traffic. So regardless of how things start to level off in the rest of the country, we don't have the factors that will allow that to happen here, at least not yet. So Altos Research, they put a lot of data together for the real estate industry, and they say they keep watching for it, but there's absolutely no signs of a market slowdown anywhere in the data. If anything, they're continuing to see the market heat up. And Tom's cousin over at Fortune Magazine says that a lot of industry insiders are correcting their previous outlooks for 2020 to take a much more aggressive stance, more bullish stance as to what's going to happen the rest of this year. And ShowingTime is an app that realtors use to set up appointments for home showings. And we see that right now in 2020, we have a lot more interest, a lot more activity there in people, buyers wanting to see homes than even last year when we were at historic levels. So the lack of existing home sales is not due to lack of demand. And just to keep things simple and to wrap it up, here we have home price forecast for 2020 from some of the big analysts out there. Two of my favorites, CoreLogic, their data and their analysis is top notch. and then the HPES, which is the home price expectation survey. This is an average itself of 100 economists. But here we also have Fannie, Freddie, National Association of Realtors, and Zelman's. So this is what they're forecasting as of last month for the rest of this year. And if you average all these people in, all these experts in, we have an average expectation of a 6.7% increase in home prices this year. I can't believe I did all that in 10 minutes. I hope I didn't give you guys too much to digest.